And yes, dumps are happening. Dumps are happening for sure, right? So what we see here just 2 hours ago coming from what is this? CoinGape. That's funny. Says breaking, Three Arrows Capital dumps 33 million of staked Ethereum stETH. Venture capital firm Three Arrows on Tuesday swapped about 33 million worth of Lido staked Ethereum for Ethereum on DeFi platform Curve. This is a problem. This is a big problem. And thanks for the $20 super sticker, Twisted. Because we are going to basically run out of Ethereum to back, of course, these kind of withdrawals. The move comes as stETH prices diverge further from Ethereum prices in secondary markets, pressuring traders using the DeFi token as collateral. Yes, if we take a look at Lido, right, we are actually up a little bit right now. But if we compare it to Ethereum, 1203, 1137, we have depegged. stETH is depegged. I was calling this all last week. I was warning you guys that this was going to happen. And it's unfortunately, you know, I hate to say, like, my wife is one of those that'll be like, why are you manifesting this crypto drop? And I'm like, I'm not trying to manifest. I'm just reading, you know, reality here, guys. But I get it. It's funny to a certain extent because the writing's been on the wall, right? Three Arrows is second major holder of stETH to dump the token since last week. Crypto trader Alameda Research had swapped about 1.5 billion of the token, all of its holdings, for ETH last week. Staked ETH divergence from ETH can likely be tied to that trade, which also occurred on Curve. The DeFi token is currently trading at 1103 compared to ETH's price of 1173. We just actually looked at the current prices. While the 33 million swapped by Three Arrows represents a substantial amount of the firm's staked ETH holdings, Three Arrows still holds about 22 million of the token in one of its wallets, according to a crypto commentator, this Twitter user. On-chain data shows Three Arrows has been consistently offloading staked ETH since the past month. The venture capital firm now appears to be transferring the ETH gained into lending pools on Aave and Lido, which is probably not the best plan. I just wonder if these guys watch the channel to help with their market moves from a technical perspective. Moving to a lending pool like Aave and Lido, which obviously, like, staked ETH is a portion of Lido, but moving it over to a lending pool on one of those, a platform that is obviously utilizing these types of technologies surrounding DeFi, is not going to help you. You obviously need to purchase the Ethereum. And then as far as leaving it in there, you need to be extremely careful with Aave, with Lido, with these technologies, right? With these DeFi technologies, especially when we are seeing decoupling of all, or depegging, excuse me, not decoupling, but depegging of all of these wrapped assets. Because as we get closer to the merge, or the merge keeps getting further and further away, it really affects all of DeFi. It doesn't just affect the stETH, it affects everything. I mean, case in point, like if we look at wrapped Bitcoin right now, it's at 22,176. If we look at Bitcoin, it's at 22,227, right? So we're kind of still depegged as far as wrapped Bitcoin as an ERC token with actual Bitcoin. You'd be better off just holding Bitcoin than holding wrapped Bitcoin, right? That's the point that I'm making here. And it all surrounds basically an exit strategy of the entire Ethereum platform. So anything that's building their DeFi on ERC20, on the smart contracts, on Ethereum just in general, they're at risk, and they'll continue to be at risk. While it is unclear how much total exposure Three Arrows has to stETH, its recent transactions suggest the firm is trying to cull this exposure. But its swaps along with Alameda have contributed to a major imbalance in Curve's stETH liquidity pool. About 80% of the pool now consists of the token, which may represent a further downside for the prices. So to understand what they're saying here, 80% of it is in the actual pool. So when you set up like liquidity for a decentralized exchange like Uniswap, or in this case Curve, or whatever it may be, what you have is you have a representation, usually a wrapped representation of one token. Let's just call it Bitcoin, wrapped Bitcoin, and you have a wrapped representation of another coin. We could call it Ethereum if you wanted. You pair those two together like an individual. This can be done in a decentralized manner, takes 50% of one and 50% of the other and wraps it. And then when you make the trade back and forth, this is what enables you to do it without a third party. The problem that we're seeing with stETH right now is that this pool has gone from a 50-50 standing of stETH and ETH to 80% stETH and 20% ETH. So really 60% of the stETH cannot get swapped back out. So when we look at, for example, something like the numbers that they're talking about here, 33 million swapped, but 22 million is left. The reason that 22 million is left is because the other big whale already took a majority of that liquidity out of the pool. And frankly, there's probably not enough liquidity for them to actually swap out all the stETH that they have available. And that's really what's going on here. It's not that they're like confident and they're like, well, we'll leave a little bit of a hedge over here on stETH because maybe it goes back up. No. That's not what's happening. What's happening is there's not enough liquidity for them to swap the rest of that 22 million. That's what's really happening here. Okay. So by itself, staked ETH is a little impact on ETH prices or the broader market. That is partially true, possibly. I don't actually believe that, because here's the problem, is it's representing what happens post-merge, right? And what it's representing is the faith in Ethereum that is being staked and the fact that you can't withdraw it. That's what's happening here. There is very little faith in the merge is what this is representing. There's very little faith in the ability for people to actually pull their stake out, and it will affect the price of ETH. So this is kind of like, I get it. Like when we see wrapped Bitcoin, it would be more of the case that the price of wrapped Bitcoin has less of an effect on the price of Bitcoin itself. What it means is there's not enough liquidity of actual Bitcoin sitting around to back the wrapped Bitcoin on that platform. And that's going to be okay. Like Bitcoin's probably going to be okay as far as that perspective. But when you're talking about a representation of a portion of staked Ethereum, which specifically is there to power the consensus mechanism that they're moving to, then to me, that does spell an impact on the broader market as far as all of DeFi, as well as, of course, Ethereum layer 1 ETH itself. Okay. Even as its price drops in the secondary trade, the token can still be redeemed for 1 ETH when the merge goes live. That's not true. And it's pretty disappointing that a lot of these journalistic outlets for cryptocurrency do not understand the technical behavior behind it. They are not keeping up to date with things like roadmaps, with specific, explicit statements from developers that there will not be withdrawals available. Yes, the platform could enable the withdrawals, sure, but they're going to go bankrupt because they're not going to be able to pull the actual staked ETH out. So a lot of these outlets need to get on, they need to get their, they need to actually do their research, because this is terrible, right? Like they're basically telling people that, well, once the merge happens, you'll be able to unstake and that you'll be fine. Sure, you may be able to unstake your wrapped version of ETH just based on the policies of whatever, the decentralized platform or the DeFi platform primarily. This is going to affect, of course, the centralized exchanges. But the fact is you can't actually withdraw post-merge. That's going to come in an EIP later. And these outlets need to start basically reporting properly. I'm so tired of correcting them on these topics. But uncertainty over the token is causing panic selling of Ethereum and other cryptos. Even worse, its use as a collateral by major crypto lending platforms, particularly Celsius, is threatening to liquidate billions in positions. Celsius faces a liquidity crunch due to the drop in stETH prices, which is affecting its leveraged position. Now, remember when I originally came out with that video? I think it was like Ethereum is doomed. This is why we're talking about Celsius, and everybody's like, what does Celsius have to do with staked Ethereum? They said that they couldn't be the same thing and blah, blah, blah. Finally, these outlets are coming out and actually saying it. But I just want to point out, we were correct. That's what was happening here. It's specifically related to the merge, related to wrapped staked Ethereum. And that is the problem that the entire market is experiencing, the broader market, right? Outside of just Bitcoin. That's why you see a larger dip in things like Ethereum, or in Ethereum over Bitcoin right now. This is what's happening. So keep your eyes peeled when you read these articles. Make sure that you are going and getting the real information that's behind them, because a lot of them aren't reporting correctly either. And you need to pay attention. And it's going to be extremely hard to pay attention to the things that actually matter in a bear market, because a lot of people here are used to writing articles in a bull run, getting lots of clicks, and basically not having to do a ton of research, right? The low amount of views, for example, on like an Ethereum dev call is extremely disappointing, because there are way more people reporting on the Ethereum dev call than there are people watching the Ethereum dev call. So where are they getting their information from? Are they sitting down? Are they doing the work? Are you getting news from people that are doing the work, or are you not? And in the bear market, that's going to be extremely important, okay? I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.